What's the housing market say about the domestic spirit of America right now?
Well, the housing market probably is the one area where the data has actually been better.
Exactly.
Which is great to see. And it's largely a function of lower interest rates. I would be somewhat skeptical to argue that this is now a second lift in the housing market. We're going to see a new resurgence of housing.
Are you modeling, as we're going to the jobs day today, are you modeling a sub 2% economy?
We are modeling a sub 2% economy. We have growth in Q3 tracking 1.7%, and in Q4 we think we're going to see it slip a bit lower to 1.3%. And that's largely because we have a manufacturing recession already, and now we're seeing some bleed into the services side. It's not an outright recession in the economy, but it's certainly a sub-trend growth picture for a few quarters.
What is one thing, Michelle, that actually you would look at to point to a significant downturn in the U.S. economy for anyone else? Is there an indicator that we should be watching out for?
Yes, certainly. So you want to look at market signals. They're important. Look at the shape of the yield curve. Look at credit spreads. Look at volatility. In terms of economic data, I would say the labor market data is particularly important. And really, I think what matters is the evolution of the data, right? So what you're seeing now on the labor market is that job creation is slowing. The work week is coming down. Temp hiring is down. Those are the early stages of a business sector that's starting to become a little bit more cautious and want to cut back where they can. But you're not yet seeing signs of firing. If that changes, if initial jobless claims spike higher, that's a pretty good indication that we're going from a sub-trend growth economy to an outright recession. And we're not there yet, importantly.